Ladies and gentlemen, good day and welcome to the Dr. Lal Path Labs Q3 FY22 Earnings Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishit Solanki of CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and welcome to Dr. Lal Path Labs Q3 FY22 Earnings Conference Call. Today, we are joined by senior members of the management team, including Honorary Brigadier Dr. Arvind Lal, Executive Chairman, Dr. Om Prakash Manchanda, Managing Director, Mr. Bharat, CEO, Mr. Ved Prakash Goel, Group CFO, along with Mr. Rajat Kalra, Company Secretary and Head of Investor Relations. I would leave you with a standard disclaimer here. Some of the statements made on today's call could be forward-looking in nature, and the actual results could vary from these forward-looking statements. A detailed statement in this regard is available in the results presentation, which has been circulated to you and also available on stock exchange website. I would now like to invite Dr. Lal to share his perspectives. Thank you, and over to you, sir.
Thank you very much. Good evening, everyone, and welcome to Dr. Lal Path Labs Q3 and 9M FY22 Earnings Conference Call. I will walk you through the key initiatives and share an update on the industry landscape. I am glad to share that we have completed the acquisition of Suburban Diagnostics in Bombay. With this, we have become one of the leading players in the fast-growing Western region and endeavor to take our share even further. The objective is to leverage the expertise and capabilities of both the companies to deliver accurate diagnostics with better patient experience. Given the onset of COVID over the past 2 years, there is a marked change that we have seen in people's behavior with respect to health awareness and hygiene. People are taking more precautions, being vigilant, and adopting healthier lifestyles. Diagnostics has played an important role in helping people keep a track of their health. While we have been actively engaged in providing our patients with high-quality diagnostic services, which has become synonymous with our brand name. As I have mentioned in my previous calls, the pandemic has helped bring about a significant change in the diagnostic space, testing the pedigree of the unorganized players. This has helped accelerate the shift to organized and national diagnostic chains which follow stringent safety protocols and have foolproof processes in place. The need for accurate diagnostics paired with permission for COVID testing being granted only to a select players will most certainly continue to act as a catalyst for this shift. Dr. Lal Path Labs' reputation and pan-India presence puts it in the right position to expand further. Our hub and spoke model, a combination of our laboratories, collection centers, and PSCs enables us to maximize our potential for expansion without compromising on patient satisfaction. As a process, our team tracks latest technological innovations, and we deploy them on a timely basis to stay ahead of the curve when it comes to digitization. Through this, we aim to ensure a seamless and convenient experience for our patients, allowing them to book tests and receive the reports at a touch of their fingers on their smartphones or iPads or laptops, etc. The last 2 years have been a roller coaster ride for us, as well as for the industry on the back of the 2 or 3 waves of COVID, I should say. I am glad we swiftly navigated through these challenges and offered our patients and employees all possible help and support to combat this contagious virus. We must take all precautions, learn from the past, and make sure we remain conscious of our health. With that, I would like to hand over the floor to Om. Thank you very much.
Thank you, Dr. Lal. As always, thank you everyone for taking the time out for this call. I hope all of you are keeping safe and well. In my comments, I shall talk about strategic focus areas. However, before that, I want to reflect briefly on the last 2 years' progress. As you all know that we started Q1 of FY21 with a lockdown that adversely impacted non-COVID business in that quarter. In the same quarter, we had introduction of a new test in the portfolio, that is RT-PCR. The revenue from this test partly offset the decline that we had due to non-COVID business that was caused due to various disruptions. Next, then we experienced gradual recovery of non-COVID business throughout the fiscal year 21. At the same time, one also saw the rising trend of RT-PCR volume and decline in price per test as notified by state governments time to time. Then came in a huge spike in quarter 1 of FY22 due to severe COVID wave, 2 resulting in the highest ever revenue contributed by RT-PCR and also by a new group of COVID-allied tests like IL-6 and D-dimer. COVID-allied tests primarily went up due to significantly higher doctor consultations and hospitalizations. Then in subsequent quarters, one has seen tapering off of COVID revenue, both for RT-PCR as well as COVID-allied tests. This trend got further accentuated due to gradual decline in realization per test as well. In summary, I would say that given very high degree of volatility, both on monthly and quarterly basis, we should analyze our financials on full year basis, not on quarterly basis. On our part, we have tried to make the information as visible as possible by giving monthly and quarterly split between non-COVID, RT-PCR and COVID-allied tests. Directionally, my sense is that we shall continue to experience month-on-month unevenness in sales pattern for a few more quarters, both in absolute figures as well as growth rates, given the varying base of last year. Therefore, it will be important to do any analysis on annualized basis. Now let me come to strategic areas that we are focusing. Structurally, our business is now taking a shape of 2 verticals. Vertical 1 is LPL organic and vertical 2 is LPL inorganic, which is newly acquired assets like Suburban or smaller companies under Path Lab Unifiers, which is our fully owned subsidiary. We shall continue to drive both these pillars of growth in times to come. Second is, right from beginning, our efforts have been to continue to build non-COVID business, which we believe is more sustainable business, while at the same time meeting the sudden demand surges of COVID happening quarter-on-quarter basis. Number 3, we are enhancing access of our services by strengthening omni-channel approach in cities and pursuing hub lab infrastructure in Tier 2 and Tier 3 towns. Whereas during pandemic, offering home collection is the right approach, and we are putting in place a process to meaningfully address this requirement from a section of patients while ensuring quality of service and care. At heart, we remain a very well networked chain of labs interlinked by technology and poised to deliver accurate outcomes at scale. We have demonstrated the ability of this approach to grow volumes and have been doing this while maintaining pricing for the past 3 to 4 years now. We will be spending our energies on augmenting our brand infrastructure. That's the lifeblood of our model. The consumer connect in diagnostic services is paramount. It will be the prime objective to work with our franchisee partners to bring the DLPL and Suburban Diagnostic brands closer to the patients. The pandemic has inculcated awareness about evidence-based testing in the population. The natural flow of samples towards wellness and preventive categories is also building up. We continue to support these trends through our response based on scale of network and integration with technology. With that, now I would like to invite our CEO, Bharat, to continue this conversation. Thank you.
Thank you, Om. Welcome to our call today. I honestly hope all of you and your near ones are keeping healthy. I will take you through the business highlights, including Suburban Diagnostics, which became part of our organization with effect 12th November 2021. In Q3, we served 6.6 million patients, leading to a revenue of 497 crores, representing a growth of 9.8%. COVID and allied tests contributed to rupees 59 crores, that is 12% of the overall revenue. The contribution of home collection to total sales in the quarter is at 10%, with significant contribution from our franchisee partners. Our non-COVID revenue of rupees 438 crores registered a growth of 28% over Q3 FY21. The strong growth in revenue is led by patient volumes, which registered a growth of 25%. The higher growth is also favorably impacted by a lower base in last year due to COVID-19 pandemic. I am glad to share with you that our non-COVID business sees further acceleration in growth momentum as compared to Q2 FY22. This is in line with our stated direction to bring back our growth rates to pre-COVID levels. Our service enhancement and market activation programs, including new lab and collection center opening, along with strong patient and channel partner marketing programs, continue to make very good progress. We have recently opened labs in Bhagalpur in Bihar and in a very difficult terrain of Leh. During the quarter, we have successfully integrated artificial intelligence in prostate cancer reporting, leveraging FDA-approved technology. This combines the strength of humans and machines to bring unparalleled patient care. Our Swasthfit Bundle program continues to do well, and we are also making good progress in our high-end testing programs, notably oncopathology, led by a combination of interventions across multiple departments and technologies, including the use of AI technologies. We remain committed to realizing the potential of healthcare through timely, accurate, and quality solutions to patient needs. With that, I would like to invite Ved to take you all through the financial performance. Over to you, Ved.
Thank you, Bharat. Good evening, everyone, and thanks for being on this call today. Firstly, I like to mention that we have completed the acquisition of Suburban. Accordingly, results for Q3 and YTD include Suburban with effect from 12th November 2021 and are not strictly comparable with previous year. I am now sharing some of the financial highlights for the quarter. Revenue for Q3 FY22 is rupees 497 crore as compared to 452 crore in last year same quarter, a growth of 9.8%. However, non-COVID revenue increased by 28% in Q3 FY22. Revenue from COVID and allied tests in Q3 FY22 is rupees 59 crore, which contributes to 12% of total revenue against 24% in Q3 FY21, a decline of 47%. Realization per patient for Q3 FY22 is rupees 747 as against rupees 824 for Q3 FY21. The lower realization is due to the reduction in COVID RT-PCR realization. Normalized EBITDA after eliminating the impact of RSU, SR and one-time acquisition expenses in Q3 FY22 is rupees 142 crore as compared to 145 crore reported in Q3 FY21. Normalized EBITDA margin for Q3 FY22 is at 28.5%. Reported PBT for Q3 FY22 is rupees 82 crore. Normalized PBT after eliminating the impact of one-time acquisition expenses and notional depreciation as per Ind AS 103 on consolidation of Suburban for Q3 FY22 is rupees 113 crore as against 129 crore in Q3 FY21. Normalized PBT margin for Q3 FY22 is at 22.7%. Reported PAT for Q3 FY22 is rupees 58 crore. However, normalized PAT after eliminating the impact of one-time expenses on account of acquisition of Suburban and notional depreciation is rupees 84 crore as against rupees 96 crore in Q3 FY21. Normalized PAT margin for Q3 FY22 is at 16.8%. Net cash and cash equivalent after adjustment of OD against FD at the end of December 31st, 2021 is rupees 331 crore. That brings me to the conclusion of my opening remarks, and I would now request the moderator to open the forum for Q&A. Thank you.
The first question is from the line of Shalin Kumar from UBS. Please go ahead.
Yeah, hi. Thanks for the opportunity, and thanks to the management. So, sir, a bunch of questions. When I was looking at your P&L, the margin compression is largely on account of employee cost, and interestingly, not on account of gross margin. So, how should we read this? Is it because of Suburban that is leading to, or is there a change in strategy over here?
Yeah, Shalin, this Ved here. You are right. This is largely on account of Suburban. So that was not in the base. This year, the Suburban personal cost is also added in this.
So, sir, so going forward, how should we assume this cost? Like, there will be operating leverage here. There's opportunity for you to rationalize it. How should we see this? Or this just for the modeling purpose, or is there a chance for we can decrease it, or how should we see it?
Yeah, so definitely there is, because of this COVID, there are certain areas where we have infused certain manpower. As this COVID is subsiding, and there is opportunity where we have to look which are the costs, which are the areas where we can optimize this cost.
So, Shalin, this is Om here. So I think particularly to Suburban, we clearly look at this as not a cost reduction exercise, but we look at driving top line growth. So we will try and improve the productivity of the entire asset by driving growth. However, in the short term, there will always be a challenge of recalibrating our manpower costs, because some of these costs also got added because of COVID in the last 6 to 7 quarters. And Suburban COVID contribution is very high compared to what we have in LPL. So we'll have to really see how it pans out. But I would actually say that we will look at revenue growth as a way to really reduce this percentage cost.
Yes, operating leverage.
Operating leverage, yes.
Right. And wait for this depreciation again. Is there any one time in depreciation over here, or again this will be the base? This will be the base going forward.
So this will come, because this is, intangibles and goodwill, which we have acquired in this acquisition largely for the Suburban. And this will be over a period of, let's suppose, next 5 to 7 years to be write off as per India's 103.
Right. So no one off there. Okay. Yeah. No, I understand. There will be a portion of amortization. Amortization. Yeah. And so because we see that there's a reasonable amount of non-COVID revenue even in the 48 months of Suburban. Part of it because of Omicron hitting Mumbai early. Is that the right way to think?
Significant amount of COVID revenue, you mean?
Yeah, sorry, COVID revenue. Yeah, like reasonable higher amount of COVID revenue than at a standalone level.
I think there are 2 factors. One is Omicron may be there, but it's not that to large extent. But it is primarily due to international arrivals in Bombay. Suburban has a contract to service passengers at airport, Bombay Airport, at Mumbai Airport.
Understood.
So then there are 2 kinds of tests they do. One is RT-PCR, other is rapid PCR. So they have a contract to do rapid PCR, which now, of course, the pricing has come down very sharply to, I think, 1975 or so. In earlier days, during just before the transition, this pricing used to be 4,500.
Okay.
So there is a very large component of that also has come into this. So as I mentioned in my comments, that whole thing is so uneven on a monthly or weekly basis. We have to really see a much longer time horizon to understand these figures. but overall component of COVID in suburban is relatively higher than what we have in LPL.
So by that thing, to at least in near term, COVID contribution will remain higher in suburban, right? Even and as more and more international travel starts, so while the pricing may come down, but some element will still be there.
See, the way to look at COVID, according to me, is the following. I may be wrong as well. Is that there is something called baseline revenue that will remain in all the companies.
Right.
Now, where does it settle down as a baseline? One has to see. And there are two components to this baseline revenue. One is the travel-related testing, and other is medical-related testing. And in medical also there are two further components, whether it is diagnostics-driven or whether it is hospitalization-driven. In wave 2, we saw a lot of testing driven through hospitalization as well, which actually was very unique to that wave. It has not happened in Omicron at all, which was all these IL-6 D-dimer, things like that. This time we haven't seen those tests at all. Now, then we are left with only diagnostic-driven testing, but even that contour is also changing because a lot of rapid antigen tests is coming with home diagnostics. We have seen in Omicron a lot of that testing happening. I don't have a data point to support that, but that's what one has heard about. So I think there are a lot of moving parts to this COVID numbers. On the travel side, my sense is further if vaccination-driven kind of arrangement happens between the various countries, then you may not have RT-PCR test requirement also. The way it has happened in domestic travel, because from one state to another state, you don't need RT-PCR test, you just need to show a vaccination certificate. It's quite possible that countries may have an arrangement that as long as you're vaccinated, you don't need RT-PCR report. You understand what I mean?
Yes.
So there are a lot of these moving parts which are there. Even for us, it's becoming very difficult to predict the demand for this COVID going forward. I think the sense that I have is, as a management team, we'll have to assume certain baseline revenue. To me, that baseline revenue is definitely not what the current trends are. It's going to be lower than that. And then we have to budget for these spikes. Nobody is wishing for those spikes at all, but if at all that happens, we'll have to prepare our systems to meet that demand.
Understood. Just last question from my side, and then I'll join back the queue, Om sir. So, because of Omicron, this is more so related to the current quarter. Was there a lot of disruption in our non-COVID segment and also in a B2B segment where because of elective surgery pushed out? So should we expect that in the fourth quarter?
So yeah, January actually generally is the lowest month out of all the 12 months. Only we say that Q3 is the lowest quarter, but actually Jan as a month is lowest. Now it is a little bit impacted by, I found that this time it was a bit of a self-imposed lockdown because everyone was anxious and didn't want to move out. And northern region has seen a little bit of severe winter as well. So I think it's too early for us to comment on non-COVID trend because as we just come out of this winter, we come out of this Omicron wave, we have to yet to see that in the next 2 months what really happens. My experience suggests that whatever demand that never got serviced will always now come back in the later part of this quarter. So I think it's a bit early, but having said that, yes, non-COVID definitely got impacted because of self-imposed restrictions on movement.
All right, sir. Thank you so much. That's it from my side. I'll join back the queue.
Thank you. The next question is from the line of Pooja Bhatia from Morgan Stanley. Please go ahead.
Greetings, everyone. On digital health front, there has been user acceleration during COVID. So how much do you think can be retained given that mobility restrictions are getting normalized and people can actually walk into a physical pharmacy store and for diagnostics, say to a collection center or a lab? How much of this is here to stay?
Hi, this is Bharat here. You're very right. When Omicron or any such wave hits, a lot of digital properties get used up. For example, people book tests on app, Google searches go up, etc. Also, the installed base of the app also goes up during this part of the time. However, the good news we have seen is that whenever the wave goes back, then the digital property adoption continues to be at a higher level than the past. It may take a temporary kind of drop down, but it continues to remain at a very high level compared to the past trends. Number two is that Dr. Om mentioned in his speech of our omni-channel approach, which is to provide a seamless movement of patient traffic and information flow between app, physical store, etc. So that is really what we are focused on, perfecting that model so that we are able to seamlessly provide services across app, across website, across the physical stores, say the franchisee or our own companies. So it is basically an omni-channel play, and it is not a either-or play for us.
So Bharat, just to add to that, on the omni-channel front, like we know that we're sort of entering into a new era with the emergence of online aggregators, and a lot of these have, built presence across the value chain, which is e-pharmacies, teleconsultation, and they do have target of growing, more than 30%. So if we have to really grow more than mid-teens, mid to high teens, then do you think there is a necessity, there's a need for us to also build presence in those areas?
So this is Om here. I would respond to this sort of a thing that is happening in the market in one simple way. There are two responses that we have. One is augment our own digital property, which is what we are doing, so that if the consumers or patients want to access Dr. Lal Path Labs directly on its own digital platform, we should actually be there. The second is we also fully well know that there are a lot of players who are coming which are full stack models, and they are not only offering diagnostics but they are offering other services, and it's quite possible that they may grab or they may own the customer to start with. In that case, our response is that we would partner with them and we would stay connected with these guys. I think we are already listed on some of these platforms, and we won't hesitate to partner with these guys.
Understood. This is very helpful. And just one more, what percentages of tests are being conducted through your online platform at the moment?
So there is actually, this category has still not evolved to a fully online model, because people can book an appointment online, but they are still unsure about which test to choose between 3 tests of, let us say, lipid profile. So there is still a call center or a physical intervention which happens. So you must look at this percentage in various legs of the journey in terms of what is the interest generation, what is the final output coming in the funnel form. So at this stage, it is not a very significant number, but it is a definitely growing trend.
I think it's not a very well-defined group of calls that are coming in, but I think one directionally, definitely it's going up, right?
Yes, indeed.
Yeah. Is it rapidly moving up? I don't think so. But directionally it's going up, but is it disrupting the entire trend? I don't think so.
Okay, and on the new labs in Bangalore and Mumbai, any update on these?
Yes, so Bangalore, we have an update. Bharat, you want to talk about it?
Yeah, Bangalore, we're very pleased with the progress we are making. In fact, the lab is now fully settled in. The test menu is significantly expanded. We almost doubled the number of tests we were doing vis-a-vis the past. So it's been a good, journey for us in Bangalore. The task is not over. There is still miles to go. But to say the very least, we are very happy with the progress we are making.
And Mumbai lab is on track. I think basically with Suburban coming in, we are relooking at the whole strategy for Mumbai city. We will see whether this lab, how it is utilized, whether it is by LPL system or Suburban, we'll decide as we go along.
And one last, if I may, with Suburban acquisition, West contribution has gone up to 28%, is right?
What contribution, sorry?
West region contribution.
West region, yeah, you're right. You're right.
And how much would be Delhi NCR now?
Delhi NCR
is about 33.7, roughly 34% for Q3.
Okay. I think Q3 is not fully loaded for Suburban. Right? So I think we don't have exact number because Suburban number is only for half of the quarter. But broadly speaking, we take about 30% for Delhi NCR is the number that we have. And rest of North India is about 27. So this will make it about 57. And that number used to be about 70 earlier.
Okay, thank you. I'll join back in the queue.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Yeah, good evening, and thank you for taking my question. Just the first one is on help us disaggregate that 6.6 million patients into COVID, non-COVID, please.
Wait, you want to answer that?
So Shyam, we done 5.6 lakhs patient RT-PCR tests, and rest are non-COVID patients. However, there are overlaps where there are mix where along with the non-COVID patients there are COVID tests also. But as a standalone, pure RT-PCR is 5.6 lakhs.
Got it.
See, what is happening is that these days, unlike the first wave and second wave, COVID tests are actually mixed up with non-COVID tests. So it's become very difficult to segregate whether that patient is a COVID patient or a non-COVID patient. So that's why it's becoming a little bit complex. But otherwise, what Ved just mentioned, those are exclusive RT-PCR tests that we have done, which is 5.6 lakhs.
Yeah.
Got it. So just trying to understand, Dr. Oman, you said that it's difficult to look at non-COVID at this point of time. The trends are not very clear. I just did like a 2-year CAGR on Dr. Lal's non-COVID sales, which is about 413 crores with 2 years back. It seems to be 12%. Is that something that you think is right, or is it very way off? We had a 15% growth pre-COVID. So just want to understand how we should look at that particular line item. Even a 3-year or a 5-year view is also helpful.
I think if you just go back before this COVID happened, and we used to talk about mid-teens as a like 13, 14, 15%. Now, we also haven't taken a price increase for now. So my sense is that's the best way to look at it. What is the positive rub-off of COVID or non-COVID, one has to see as we go along. Because a lot of testing has already happened now, and there's always a gap. It's not something people just get tested every now and then. My sense is if I'm pushed to put a figure on this, I think the mid-teens could be a good way to look at it. Somewhere it could be on the lower side, sometime it could be on the higher side.
Got it. Dr. Om, and again, I did extend this exercise to realization per patient and volumes, but so it looks like it's still all volume driven. Just subtracting that 5.6 lakh from your 6.6 and then looking at historically, that seems to have grown closer to the 13-14% volume growth. So it seems to be mirroring what we had 2 years back. Is that right? Is that conclusion correct?
I think that's where we are also probably seeing the trend. Maybe we'll wait for 1 or 2 more quarters to see how it is, but I think it's fair to say it's all volume driven, mid-teens growth.
Got it. Thank you, Dr. Om. Second question is on Suburban and the integration. How has it gone? Do you have full access now to this being once it's a subsidiary? I know there are some contingencies that are still there on a full year fiscal basis. So if you could just update us on what you have seen so far of the business. And I think it's 50 days, right? So the 28.5 normalized EBITDA margins could actually be lower if you assume a full 90-day, if you were to do some kind of a pro forma. So help us understand Q4 margins or anything that you want to guide on margins.
So I think maybe margins I'll hand it over to Ved, but overall our approach so far has been a bit of a soft touch to this asset because as you rightly mentioned that there is some payout linked to the fiscal performance, and as a part of arrangement we have said that the current management team needs to be given enough space not to disturb them. So which probably will go till 31st March. We are just trying to understand what are the levers for growth as we go forward. I think to that extent we are connected, and unfortunately due to this Omicron, our movements also were restricted to Mumbai city. But overall, it's been a little bit of soft touch to the whole thing, and we are just trying to understand what are the levers for growth. As far as the margins part is concerned, I'll ask Ved to take this question.
Yeah. So not as a specific Q4, but going forward, I'm just telling you, Shyam, that so we all got operating leverage because of COVID light. As we are moving, going forward, moving pre-COVID level on our top line, especially on non-COVID basis. So as our margins shall be, in the line where we used to have 26-27% normalized EBITDA margins. So those kind of,
I think his question is that Suburban is going to impact you.
So I'm coming to that. Suburban is over and above is obviously we know that Suburban has a lower EBITDA margins. The idea is to optimize, but as Dr. Om earlier mentioned that real driver is revenue growth, not the cost efficiency.
So I think the Suburban business has clearly demonstrated that this has a huge operating leverage, and we saw that last 2 years as the COVID business went up for them, their margins also certainly improved. The only challenge is whether COVID business is sustainable. We all know it is not. So there is definitely a situation where the margins will tend to go back to where it came from. But we know that there is operating leverage, and the idea is to drive volume growth, and that's how we'll improve these margins.
Got it. Thank you and all the best.
Thank you. The next question is from the line of Nikhil Chaudhary from Chris PMS. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, I had a couple of questions. Sir, I wanted to understand in 438 crores of non-COVID revenues, how much is through Suburban? Because I wanted to understand our own non-COVID growth. That like we have reflected 28% of non-COVID growth year on year. I wanted to understand how much is due to our own LPL.
So non-COVID from Suburban is 24.7.
Understood. So we have still grown at a very healthy rate. And Q1 our non-COVID has been a bit lower. Like, was it due to the disruption at the Dadar lab that we saw? Bombay lab was shut for some 8 to 10 days. Was it due to that, or is there something else?
So you're talking about that 28% versus 21% of standalone LPM. That's what you're saying?
No, I was asking about Q1Q. Like we have shown one chart on page on slide number 8, where our Q2 non-COVID is 448 crores and Q3 is 438 crores. So wanted to understand the Q1Q non-COVID growth, degrowth, of 3%.
That's because quarter 3 is generally a lower quarter.
Understood. Yeah, correct.
Sequentially, it is always lower than the Q2.
Yeah, understood. My bad. Also, sir, wanted to understand our ad spend strategy. Like, we don't advertise in television, newspaper, or Facebook ads, Insta ads. Wanted to understand because we have been seeing even Metropolis doing it, even the new age startups doing it. Although we have been showing good growth, but will it not propel the growth even more if we do the advertisement? We are cash-rich company having 30 crores of cash on balance sheet.
Hi, this is Bharat here. We do advertise digitally. If it can be on digital, including Facebook, etc., depends on the TG and the city selection. So possibly you may not have seen it, but I can assure you that we are a significant advertiser on the digital platforms, inclusive of doing even below the line activities. So we haven't cut our marketing spends. We have continued to sustain the spends.
Okay, understood. And the last thing, I wanted to understand more on the Suburban integration. Sir, I feel like Suburban has got 200 centers. Correct me if I'm wrong. Why can't we probably, why are we waiting for some 1 or 2 years? Why can't we just put the Dr. Lal Path company below the Suburban banner, the hoarding? Automatically our brand presence increases by 200 centers. Why are we waiting for 1 or 2 years to probably show that we already, Suburban is part of Dr. Lal?
I think it's a debatable point whether it is the infra that helps you to grow, whether it's the brand pull that helps you to grow. I think jury is still out. I think Suburban is a much stronger name in Mumbai city. So while Dr. Lal will continue to operate the way it's operating, so we are not pulling out that. But we are thinking it through as to how do we leverage, how do we get the synergy out of the two assets. but everybody can have a view on that. But my personal view is that we need to go after this market through Suburban in an aggressive manner, because that brand has a strong pull.
Yes, I understand. But just probably like below the hoarding, we can just put a Dr. Lal Path company. So dual branding happens any which way the revenues comes from the Suburban or Dr. Lal, it will any which way be consolidated.
I take your input and then we'll discuss it.
Okay. And the last thing, sir, I have been seeing Suburban also having a collection center next to Dr. Lal. Like I understand we have discussed this question last Concall also. Like the cannibalization of the sales, why can't we probably have some strategy like have a 1 kilometer distance, and if the say Suburban prices are say 10 to 20% higher to Dr. Lal and the patient is finding it a bit expensive, why not deviate it to the nearest Dr. Lal Path center? Two shops.
I take your point. What I'm saying right now, what you're seeing is not by design. It's actually by default, but that's the way these companies operate because they were competitors. So we will consider these inputs and then go forward.
Okay. Thank you so much, sir. That's it from my side, and wish you all the best. And yeah.
Thank you.
Yeah.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking my question. I think we've had this question coming up every now and then, but I guess from a competitive activity perspective, at least this seems to be a reasonable aggression in terms of a lot of the new entrants being a lot more aggressive with their marketing spends, marketing promotion. In your assessment, is this impacting the market dynamics in any ways? Because they seem to be advertising a lot of lower prices, lower costs as a primary means of getting customers in. And how do you see this thing playing out? Do you think this is going to go on for a while, or this is a short-term phenomena?
Yeah, I think it's a great observation that you have. I know that there was a bit of a pause for last 4-5 years before COVID. That competitive intensity actually went down a bit because PE funding was not taking place. And suddenly due to COVID, we have seen resurgence of new competition, whether it is pharma companies coming into this, whether hospital guys coming into this, or new age companies also. A lot of startups are coming in this space. My view is yes, so the competitive intensity will put pressure on pricing, which in any case I have been saying for the last 3-4 years. That's why we built our business more through volume-driven growth rather than the pricing-driven growth. Now your next question is how do I see it happening is, I don't know, your guess, my guess is as good as yours. My sense is that a lot of this euphoria is also due to COVID. And as COVID is settling down, and whatever is left, it's also such a low prices that there's hardly any margin in this. Some bit of it will get cleaned up in next 10 to 12 months is what my sense is.
Okay, that's helpful. Secondly, but when you look at the dynamics of the industry, especially in larger cities, this is where most of the incremental competition seems to be coming through. I mean, again, when the proposition that most of these guys are coming through are with the plain vanilla tests, or is there a larger test suite and offer, or these are essentially guys that are looking to just gobble up the lower end of the market along with these fitness combinations?
So first of all, what I would like, this is Bharat here. What I would like to share with you, like we shared in the previous commentaries, is that we have a very well diversified network to sustain our growth engine. We are just not 1, 2, 5, 10, 20 city player, but we actually have now a pan-India presence cutting across all population strata. That gives us the growth engine, which is required to run our company and keep it growing. Number 2 is that we have been constantly upgrading our test menu and service levels across all elements, be it logistics, be it turnaround times, whatever it takes. So we have been, investing a large amount of time and effort behind a hub lab program, which is actually shaped up very well. So given all these things, I don't think we are really concerned about either very worried about, let us say, competing in large cities, or let us say even in the smaller cities of India. We have a presence which we are able to leverage using technology to be a pan-India player.
Thanks. That's helpful. If I can squeeze in one last one. One big recurrent theme for the space, organized diagnostic space, has been that the organized guys will meaningfully take market share from the unorganized guys. In your assessment, how much of that is actually playing out? Typically, in a lot of industries, the pace of shift from unorganized to organized guys is accelerated. Have we seen similar trends happening in diagnostics, where the pace of the shift is accelerating in recent times?
Yeah, I think so. Some of these competitors that we are talking about entering into the market, they are just grabbing a lot of business from unorganized players. I'm not fully familiar with pharma industry. I think all you guys cover pharma industries. There also a lot of these small players exist who enjoy some 2% market share, 1% market share, or 0.5%. But they are still in their own right large enough to be called as organized players. So I do see that in next, let's say, 5 to 10 years, the emergence of more number of so-called organized players competing with each other than organized versus unorganized. I think unorganized sector is under a lot of pressure, and they're going to be even under more pressure as the competition comes in.
Okay. Thank you, and best luck.
Thank you.
Thank you. The next question is from the line of Vinayak Mohta from Stallion Asset. Please go ahead.
Yeah, hi, good evening. So I just wanted to harp on the Suburban thing again. I just wanted to understand, what is your broad next 2-3 year strategy on the Suburban part, and if you could also give an idea whether the margins will see a J-curve turnaround, or will it eventually catch up to the company level margins that you have maintained on the 25-26% going forward?
So first is, as we mentioned, that right now as we talk, Suburban as an asset is sitting on a very high turnover of COVID. And we don't know how it's going to pan out going forward. In all probability, it's going to sharply decline. So that's one fact we should actually factor in as we go along. Now, as it declines, there's a possibility of this company margin to go back to where it came from, which is much lower than what our LPL margins are. But what the COVID experience has taught us that if you are able to build scale in this company, there is enough operating leverage and you can improve the EBITDA margin in Suburban. So that part is now fairly clear, which is what we have seen in the last 2 years progress of this company. So first strategy would be to really drive growth of Suburban in next 2 to 3 years to see if there is operating leverage without adding additional costs, and we improve the margins. And in all probability, I feel this is possible, and we will drive top line growth in Suburban in select pockets.
Understood. So just like continuing on the same, right now, from the looks of it, Suburban is looking like it's at a run rate of 200 crores on a yearly level. So can we expect this to move like somewhere around 500 crores in the next 3-4 years? Like just trying to understand where your focus will starting be. Will it be on scale or will it be on margins? What would be your priority be on the same?
Scale. We are entering into a market where we don't have that high sort of share. So we'll focus on scale.
Understood. And so the numbers that I've mentioned, is that possible? Is that kind of growth possible?
See, now if you look at 12th of November, data says 49 crores we've added, right? You can see for the quarter is roughly about 100 crores. Now 100 into 4 is 400. Now only problem is half of it is COVID. So we'll have to probably do adjustment, but it's possible, right? Why not? We'll aim for that as we go along.
No, I was majorly talking from the non-COVID portion only. I was like removing the COVID portion for that way.
The way I look at it is very simple.
Yeah.
Delhi NCR for us is more than 500 crore.
Yeah.
Okay. This brand is a very strong brand, and Mumbai alone is a very large market. This, at least the catchment area for this brand easily is entire Maharashtra. And Maharashtra is one of the most prosperous state in India, a very high potential. So at least we are fishing in the right pond. If we get our act right, it's possible. Why not?
Great. That's all from my side. Thank you so much and all the best.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah. One question on Suburban asset. After you've taken over, has there been a good amount of price increase taken on several of the tests for the company?
In Suburban?
Yeah.
No, not to our knowledge. At least not after we require.
Okay. And the second question is on your preventive test program, the SWAST program. After all these aggregators have really ramped up on these preventive tests, have you seen some impact on the volumes for this segment for yourself?
No, not at all.
It's a big question, but I don't think you've seen any.
No. Our SWAST program continues to grow at a handsome rate.
Okay, thank you.
Thank you. The next question is from the line of Prashant Nair from Ambit Capital. Please go ahead.
Yeah, hi, good evening, everyone. So just a couple of questions, mainly on Suburban. So Om, I remember you mentioning back when you were initially going into the eastern part of the country that 100 to 150 crores is kind of the inflection point beyond which growth in the region can accelerate because you have that presence on the ground at that point in time. Now, does that apply to Mumbai as well for Suburban, which is probably excluding COVID, more or less in that range? Or would you look at it slightly differently, in this market because it's a bit more competitive?
I actually look at that hypothesis for Suburban even more because profile of Suburban is more a consumer-facing brand, as per my understanding as of now, versus East region where profile of that inflection point actually has very large B2B component. So I think this holds true for Suburban that it has a very high B2C component. But having said that, as you rightly mentioned, the competitive intensity is also equally high. So you have one headwind and one tailwind. So we'll have to see as to how we maneuver this. But I do look at this as a strong consumer-facing brand, and we can build a great franchise going forward.
Right. And one follow-up question. So when you mentioned that revenues is the main focus and scale is the main focus here, can you outline the 2 or 3 key things that you would focus on in order to gain share? So would it be pricing led or expanding test menu? I mean, what would be the dominant focus here in terms of trying to gain more shares? Because there are multiple labs operating here.
See, there are many levers to grow, and obviously I don't see pricing as a variable. So that's something which we'll have to probably study as to what the competitive benchmarks are for pricing. We don't look at that. Test-wise, yes, we are, as I mentioned in my opening comments and answer to one of the questions, that we will definitely widen the test menu for Suburban. Because in any case, before Suburban, our plan was to open a big central lab, which is currently on, and we will leverage that asset for both Dr. Lal Path Labs as well as Suburban, which means that test menu will get widened for City of Mumbai. So Suburban doesn't need to outsource high-end tests, which it is doing to some other labs. That answer is one. Second is, I think everybody is talking about technology, digital. This asset is very nimble, so that could be another variable for us to really experiment something in the city of Mumbai and then enhance service levels. I think that's the way I look at it.
Thanks. And just a final question from my side. So the additional payout that may get triggered for Suburban, that is linked to absolute EBITDA, right? Not not a function of whether it is coming from COVID or non-COVID. It's just the absolute number.
It's all inclusive, so it will be total. Actually, it really doesn't matter where it's coming from.
All right, great. Thanks a lot. That's good.
Thank you. The next question is from the line of Rishabh Doshi from Pro Invest Nirmiti Investment. Please go ahead. Mr. Rishabh Doshi, please go ahead with your question. Your line is unmuted.
I don't think he's there. You can go to the next one.
We'll move to the next question, which is from the line of Lavanya Tolata from UBS. Please go ahead.
Hello. Hi, everybody. Thank you for the opportunity, sir. So
I'm so sorry, Miss Lavanya. Can you speak a bit louder? We cannot hear you.
Oh, sorry. Am I audible?
Yeah, I can hear you. Please carry on.
Yeah. So I just want to check on, do you see higher contribution from the bundle packages like the Swasthfit with increasing awareness, just like the way you see stickiness of digital adoption even after COVID wave decreasing? So do you see the same trend of higher contribution of the Swasthfit going ahead?
See, our contribution from Swasthfit is actually more or less steady. So, because overall table for the business goes up or down, the contribution from Swasthfit is varying between 15 to 16% all through at least last 6-7 quarters. So I'm not seeing any sharp either jump or decline in Swasthfit. So it's a very steady trend that we are observing. I think if I got it right, your question is, as the COVID wave is receding, will we see an impact on this number? My answer is probably no, because even pre-COVID also we had a similar sort of a contribution coming in from Swasthfit. And if at all, pointers are that it could be slightly higher as well, because people normally go for annual checkups, etc., and invariably annual checkups happen in the month of March, because that's the time you get your, I think there are some tax benefits also people get, right?
ATD, yeah.
ATD or something. So we have seen a slightly higher contribution coming in the Q4. We'll have to see as to how it pans out.
Okay. And one question. So, as I could hear in the Concall before, that there is concerns around selecting the correct test through the online portal. So do you think that having more standardized or a particular segment, if there's someone is going to test for diabetes or the lipid profile, having more number of standardized tests, would that help increase online adoption? Do you think that's it?
Lavanya, hi, this is Bharat here. We do have a set of tests which is aimed at various disease conditions, be it diabetes, hypertension, cardiac profiles, etc. So we already have those tests, and they continue to do well as a part of our Swasthfit program.
Okay. Thank you, sir. And one last question from my side is that how do you plan network expansion in terms of labs and collection centers, increase in number of them over next 1 year?
See, I think we outlined our strategy of expansion of labs very clearly to go down the POP strata and then widen the test menu in the region as much as possible. But it's a decision based on economics. We just don't want to. We want to keep an eye on the operating margins at unit level all the time. I think this ratio between lab and collection center is very important. But I think the broad strategy is to keep on widening test menu in the region as much as possible through these hub labs is our strategy.
Okay. Thank you so much, sir. Thank you for the opportunity.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you everyone for being with us on this call today. I wish you all remain safe and healthy. I would now request the moderator to close the call. Thank you.
Thank you. On behalf of Dr. Lal Path Labs, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.